Hello, welcome to the channel of Tradeometry. Today is February 19th, Thursday. So I'm thinking about making two videos each week, one for during the week if anything major happened to the market, and one on Sunday. Every Sunday, I'll be reviewing what's happening in the market for the past week. I will also share my P&L for the week. Also, we'll be talking about what we are going to do in the upcoming week. So, I decided to make this video during the week because I believe something major happened in the past couple days. I really want to talk about it and share these very important information with you guys. So, I don't know if you still remember last week, we were right on these red candles. I said this is where we usually will get sold off because when you see these moving averages converge in the same area, it's forming a resistance around 615 to 616 area. And that's exactly what happened in the past week. So we sold off. This is last Wednesday and Thursday. Big sell off. And then we had a small bounce this week on the last 2 days. And then today we're selling off again. And I'll be sharing my technical analysis in my Discord channel with all my members. And if you're interested in joining, please check the description below. Why are we selling off today? So let's look at some the headlines from the last couple of days. So yesterday, the Fed released the FOMC minutes from the January meeting. These were some of the quotes that I got from the FOMC meetings. In considering the outlook for monetary policy, several participants commented that further downward adjustment to the target range for the federal funds rate would likely be appropriate if inflation were to decline in line with their expectations. Some participants commented that it would likely be appropriate to hold the policy rate steady for some time as the committee fully assessed incoming data and a number of these participants judged that additional policy easing may not be warranted until there was clear indication that the progress on disinflation was firmly back on track. Several participants indicated that they would have supported a two-sided description of the committee's future interest rate decision, reflecting the possibility that upward adjustment to the target range for the federal funds rate could be appropriate if inflation remains at above target levels. So, flashback to my previous take on the FOMC right after the meeting on January 28th. The Fed said the risk on employment is diminishing and inflation remains somewhat elevated. As we all know that the Fed has dual mandate, employment and price stability, aka inflation. As Fed described the current state of the economy as employment stabilizing, but the inflation is somewhat elevated. It means Fed will be relatively more focused on inflation as they believe the risk is skewed to the inflation side. And I think these Fed minutes basically just confirmed my thoughts right after the meeting. Especially you look at the third quote, several participants indicated that they would have supported a two-sided description of the committee's future interest rate decisions, reflecting the possibility that upward adjustment to the target range for the federal funds rate could be appropriate if inflation remains at above target levels. This is the first time in over 2 years that the Fed start to mention upward adjustment to the federal funds rate in the FOMC minutes. Here you see it says several participants, although it's kind of vague where some place it says several, some it says some participants. The Fed usually has a ranking of these words to give a subtle hint of how many participants actually saying what their opinion is. So, based on my past observation and some Wall Street consensus, so several is slightly larger than some. We are basically getting more members of the Fed coming to the agreement that we need to include the rate hike possibility in the future meetings if inflation remains at above target levels. So this is extremely bearish for the market. Why? Because when the Fed start to talk about rate hike possibilities, market usually panics because this is not what market was expecting. Market was expecting rate cut from now on. There's no possibility of rate hike. But the Fed basically reintroduced the possibility of a rate hike, even if it may still be a small possibility, but still it's this is a signal that Fed is sending to the market. Rate cut possibility is very small. The most likely situation would be for the Fed to hold rate steady throughout the rest of the year. And if for some reason the inflation still remains above target level, there is a possibility of a rate hike, which is what market fear the most. And the next headlines regarding Iran. So the recent talks between the US and Iran in Geneva have stalled, with Iranian Supreme Leader Ali Khamenei publicly rejecting US demands to halt uranium enrichment and curb ballistic missile development. Khamenei emphasized Iran's right to a nuclear industry and a deterrent weapons amid ongoing mediation by Oman. U.S. officials noted progress on common goals but highlighted unresolved gaps, with further discussion planned in 2 weeks. Vice President J.D. Vance stated that President Trump has set red lines Iran is unwilling to accept. Reports indicate the U.S. military is preparing for potential sustained operations against Iran, with forces positioned for strikes possibly as early as this weekend. Though no final decision has been made, the White House continues to push for a diplomatic deal but has not committed to a firm timeline. Satellite imagery shows Iran fortifying key sites, including a concrete shield over a new facility at Parchin military complex and burying tunnel entrance at nuclear sites like Natanz and Isfahan. This hardening effort is seen as a response to heightened US and Israeli military presence in the region. Iran has also conducted military drills in the Strait of Hormuz and accelerated rebuilding of its missile infrastructure, including sanctions bypassing supply chain from China. The increasing possibility of US Iran war is really fueling the market to sell off, and you can see the oil price also spiking. I think at this point it's very, very likely the war is going to break out during this weekend. If not this week, then probably next week. The amount of military forces that US is building and continue to increase in the Middle East is at the level of Iraq war right now, as some media reports this. That's another reason that markets sell off, and I'm still holding a big part of my put positions to hedge my investment. I think this could have a massive impact, especially if oil price uh, remain at these elevated levels. I believe the oil price right now is trading at the 7, 8 months high. And oil prices obviously have a huge impact on inflation. So we'll be very, very closely following this, how things develop in Middle East. And another news regarding Blue Owl. It is a major player in private credit with over 300 billion in asset under management. It announced it will permanently halt redemptions from its retail-focused private credit fund, Blue Owl Capital Corp. 2. The fund, valued at around 1.6 billion, faced surging redemption requests, nearly doubling to 60 million, which is 6% of the net asset value in Q3 2025. Amid pressures in direct lending and software sector vulnerable to AI disruptions. To address this, Blue Owl sold 1.4 billion in loans across 128 countries in 27 industries from 3 funds, enabling OBDC2 to return up to 30% of its net asset value, about $2.35 per share, to investors by the end of March and reduce debt. The company is also considering quarterly distributions of up to 5% and share buybacks while its stock remains depressed. Blue Owl's share dropped more than 8% on February 18th, and after the announcement, further 3% decline in pre-market trading today. This contributes to the broader sell-off in private equity peers like Apollo, KKR, Carlyle. Analysts noted the move as a response to liquidity mismatches in non-traded funds, potentially setting a precedent for other BDCs. The decision has sparked concerns about private credit's liquidity risk, drawing parallel to pre-2008 warning signs like the fund freezes. A lot of this private credit sell-off is tied to the software companies got demolished in the past few months. Now investors are running for the exit. This may also impact the AI infrastructure companies who wants to have more access to private credit. To the likes of CoreWeave and Oracle, they all have massive debt, still keep building their AI data centers and buying GPUs. If they are running out of access to private credit and on this low liquidity market, this could contribute to more debt issues for those companies. Now, regarding the IEEPA tariff, Supreme Court could potentially have a ruling on IEEPA tariff tomorrow. The economic and business impact is that we'll have an immediate halt to collecting these tariffs, potentially reducing input costs for US business and consumers, leading to disinflationary effects. Lower price on goods like furnitures, electronics, and raw materials. This could boost stock market in a risk-on scenario, lower interest rate, and ease pressure on industries like retail and manufacturing. So that's bullish. However, small business may still face ongoing costs if refunds are delayed or denied, which reports indicating 70% of tariff burdens fall on US consumers. Sectors like furniture imports with a separate 25% duty not under review could see continued uncertainty or existential threats. And regarding refunds and logistics, over $133 billion in collected duties could be refunded to importers, including interest, without needing new lawsuits. The process might take months or years, involving US custom data verification and potential further litigation. The administration could resist via credits against the future duties, political pressure, or burdensome procedures, creating a complete mess, as Trump has warned. Foreign firms that invested in US production to avoid tariff might demand compensation or unwind deals. Also, the Trump administration has signaled it would pivot to alternative measures like Sections 122, 232, 301, 338 to reimpose similar tariffs, though these will require investigations and could face new challenges. And the Congress could intervene, as seen in recent resolutions against specific tariffs. But options are limited if courts side against executive overreach. This will certainly create another layer of market chaos in terms of the economic and business impact and the refunds and logistics. In other words, we'll have more uncertainties going on. So all these factors are very, very bearish in the short term. Back to QQQ. The market hasn't closed yet. We're down 0.7%, which is not horrible. But if you just look at the chart here, we keep getting a lower high and lower high and lower high. And then from here, we have a lower low, and lower low, and a lower low. So we are clearly in a downtrend because we're having lower highs and lower lows. If you want to draw this channel, this could be the potential channel we're in, and we're keep getting rejected at the top of the channel. Um, so my next big level is still around 580 for QQQ because we have this previous low around 579, and then we have this 200-day moving average at 583, which is serve as a double support at this level. This is the next major level I'm watching. Most likely we should get a bounce, but there's no guarantee that this level will definitely hold. We still have a quite a way to go. Right now we're sitting at 601. So almost $20, which is like 3% ish from 600 to 580. It could happen very quickly. And the chart, it still looks a little far away, but when it tanks a big red candle, it's 1 or 2 days. We're right there. So I'm very closely watching this level. Until then, I'm remain hedged. I have my most of my investment positions hedged at this moment. I've put options and inverse ETFs. And then I want to talk a little bit about Bitcoin. So, for Bitcoin, it's actually very, very interesting. I haven't talked about Bitcoin in a long time. So you see, we topped out at October 6th last year, and then we're going straight down from there. This is a clear bear flag. So as you can see, this is like a bear flag and then a further breakdown. So we made a low last Thursday around $60,000. Right now, we're kind of holding a flat, or you can even call it a bottom consolidation. And it somewhat looks like a bull flag if you wanted to make a case for a bull flag at the smaller scale. Um, this is the pole and this is the flat consolidation. And if it's started going flat here and we have a consolidation, and then if we can break out, the next target would be 80,000 to somewhere between $85,000. That's if we get a bull flag breakout. And on the bigger time frame, we're still on a clear downtrend. My personal opinion on Bitcoin, I still have a long-term belief in the Bitcoin as an asset. I believe it will have a big market in the world, in the financial system. As of right now, the price is very, very volatile. We have a lot of speculations still in the Bitcoin, and this pullback may not fully complete just yet. We may get another retest of $60,000, but I think the bottom is very, very near. I don't think it goes to like 30,000 like some people predicting. I think this is, if not the bottom, it's very, very close to the bottom. We may dip briefly below 60K in the next couple months, and then we may get a big bounce back to form a double bottom and to solidify this bottom and continue to move up. And as you can see, the Bitcoin is actually green today. Well, the QQQ is still red. So this also signals a little bit of a relative strength compared to the tech stock. In the past, Bitcoin has a very, very high correlation with technology stocks. Maybe this is a start of a divergence, maybe, just maybe. So, but I'm very, very closely watching Bitcoin at this level as well. Um, Hopefully, we start to see a divergence where Bitcoin start to stabilize and continue to gain relative strength compared to the broad market. If you have any questions, comments, please leave in the comment section below. If you are interested in joining my Discord channel, please check in the description below. And I'll see you next time. Bye.